Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 921A, and today's date is March 17th, 2016, and the title of the episode is U.S. Economy is Tumbling into an Economic Collapse That Will Shock the World. Let's get right into the economic collapse financial news. Now, as we can see, the high-frequency traders, the plunge protection teams, they have pushed the markets up once again. It's getting close to the weekend. They want a happy ending. And during this period, we noticed something very interesting. Before the Fed came out with their announcement, and I mentioned this yesterday, we saw back in March 10th, gold was at $12.73. And they suppressed it down on March 11th to $12.61. March 14th down to $12.46. March 15th to $12.32. And March 16th, $12.31. And then, of course, the Fed came out with their announcement. And then all of a sudden, gold shot up at the end of the day on March 16th, like $40 or so. And today we're around $12.57, $12.60, and we're moving right back up to where gold was. Now we're going to watch gold very carefully because I want to see if it breaks the 1300 barrier, because like I said, as time goes on, they're going to be losing control of the precious metal market, and they'll continually try to suppress it, but it will get harder and harder. And when you look at this, it just took one day for it to go right back to where we started. Now remember, back in December of 2015, gold was at $10.50. Now here we are at $12.57, $12.65. So gold has moved up quite a bit, and we can see they are definitely losing control of the entire system. And as we move forward, as gold continually makes newer highs, more people are going to be getting into the gold market, which will drive the price up. And this is when they're going to start losing control. And at this time, I'm going to say it's going to be too late for everyone, because we're going to see the market completely take off. And most people won't even be able to find gold or afford gold at this point. Now, the initial jobless claims numbers, they have come out. They're at 42-year lows. Now, we understand there's been a huge amount of layoffs. And these numbers make absolutely no sense whatsoever. Because if you look at the ISM service employment and you look at the manufacturing employment numbers, they are skyrocketing. And then you see initial jobless claims where we're at all-time lows. And every time we turn around, there are more and more companies laying off. Scripps Health is laying off about 100 people. We see Trinity Tank Car, 850. State Street, 360. McKesson Corp, 1,600. And these layoffs just continually keep on coming. And we know at this point, there are no jobs out there. Now, there are part-time jobs, yes. But if you were making 50, 60, 70, 80,000 or more, and you were living at a certain lifestyle where you purchased your home, your car, your bills are set up for that lifestyle, it is very difficult at this point to go to 1, 2, 3 part-time jobs, because you can never make up the difference. Now, companies, they like to do a little trick to make everyone think that, hey, there are plenty of jobs out there. We just can't find the right people. I know, because I was in a corporation, actually many corporations that did this. What they do is they have job openings. Right now, the corporate media is out there, and they're saying that U.S. employers are advertising more jobs, and they just can't find the people. And the Labor Department is saying job openings jumped 4.9% to 5.5 million. And U.S. employers advertised more open positions in January, but yet hiring fell. And they keep making it seem like there's just no one out there. We just can't find the people. Well, what happens is the companies have open recs, but there's a hiring freeze. I know, because I worked in many of these departments where they said, go ahead, go out and interview people. We go out and interview people. We pick different candidates, and they say, well, hold on to that person. Right now we're in a hiring freeze. And we, of course, turn around and say, well, why did we waste our time doing this if we're in a hiring freeze? When does the hiring freeze end? We don't know yet. But we want to keep that person, out there. We want to make sure that we can get in touch with them. But right now, we can't fill any of the positions. Now, each department is not going to give up their open rec here, because if they do, they kind of lose it. So what they do is they say, yes, we need another person for this position. We need another person for this position. But companies, they don't have the ability to hire these people. Just because you have an open rec doesn't mean you're going to hire these people. And this is false when they report this, because I've seen this done many, many times. And if you're in a certain department, there's no manager or upper management going to say, you know what, forget it then. We don't need this open rec. They keep it because they know they'll never get it back from corporate. So what we're seeing right now is an illusion to keep everyone in the dark of what's really going on. And we can see as we move forward here, people are going to continually get laid off. Retail is contracting. And people's incomes are actually falling. And we know from tax revenue from corporations that there is nothing coming into the government. Yes, they implemented FATCA. They have taxes intertwined into Obamacare, which made up the difference. But it doesn't matter. The government's spending a lot more than they have coming in. But as more and more people fall off the job market, as more and more people take part-time jobs, it's getting more and more difficult for earnings to go up, where revenue coming into the government, people making more money. And since December, the Fed has gone from pricing in 4 hikes to 2. And you know it's going to go down to maybe 1. And consumers right now, they're very worried about their jobs. They're worried about earnings expectations. They're declining. They're down right now. Consumers are more worried about their jobs than they were in December. 53.7% believe jobs are not plentiful. Another 24.2% think jobs are hard to get. Now, how can that be when unemployment is at 4.9%? Because they can't find the jobs where they were laid off from. They don't exist. Those believed jobs are plentiful declined 2.1%. Since December, the number of people expecting their income will drop has risen by 2.1% to 12.5%. 70% expect the same. Now, we know Obamacare is going up. We know rents are going up. And we see that 82.8% expect real incomes will decline. That means people will have less to spend, because this entire economy right now is imploding. These are the signs that we see when the economy is collapsing. We saw it back in 2008. People saw it back in 1929. People saw it back in 2001. It's exactly the same. Now, Caterpillar, they have slashed their guidance. The first quarter is a complete disaster. And Caterpillar, they're in their own Great Depression at this point. The global sales market for them is a disaster. Now, the Philly Fed, it has spiked to 15-month highs. This is the biggest jump in new orders since October of 2005. And they were expecting negative 1.5, and it jumped from negative 2.8 to 12.4, positive 12.4. And we saw the same thing happen with Empire Manufacturing. Now, this was driven by a huge spike in new orders. But you have to wonder, with Japanese and Chinese trade data so dismal and inventories at near record levels, who's just placing these orders? Who's doing this? Now, we know that the Baltic Dry index for the last couple of weeks has risen, and we can see this probably led into the Empire Fed and the Philly Fed increasing. And we see the Baltic Dry index now, the dead cat bounce is most likely over. We saw that the Baltic Dry index fell. It has fallen again. We're going down to 392. And it seems like we are on a downward trend once again. We're going to have to watch this very carefully to see where it ends up. And of course, the corporate media, the U.S. government, the central bankers are all going to come out and say, this is the new normal, this is what you should expect. But what we're seeing right now is a complete collapse of the entire system. And it's continually collapsing. It's not getting better. It's not going to get better. People might believe it's going to be awesome because they have a very hard time thinking that things are going to get worse. And I'm not trying to do this to scare people. I'm looking at facts. We're looking at real economic indicators. We're putting the pieces together. And we're showing that things are not right. Something is wrong. Now, the U.S. government central bankers, yeah, they can come out and show us numbers, but when we look at unemployment, we say, well, why are all these people not counted? Why did you change the calculation? Why do you have high-frequency traders and plunge protection? Why don't you let the free market decide what the stock market should do? Why did the Fed step in and buy trillions and trillions of toxic real estate? Why did we have the toxic real estate in the first place? Why were they packaging and being said as AAA that it was a good investment, and it turns out it wasn't a good investment? So there's many, many different things that were going on in the background, and all of it completely fell apart. This is what we're seeing right now, the same exact thing. Now, another indicator is the operational profits of major U.S. banks. They are declining rapidly because of low demand for financial services. And what we're seeing is that the first quarter is showing us that profits are declining quite a bit. And the U.S. economy is nearing an 80% chance of tumbling into a recession this year. 2 straight quarters of corporate losses historically precede a recession. Citigroup said on March 8th their investment banking income would plunge 25% in the first quarter. Trading revenues would decline 15%. JP Morgan investment division is expecting a 25% decline in fee income as debt services and share insurance have both slowed. Jefferies Group reported a major collapse in trading revenue, with their income from stock and bond markets have shrunk by 82% in December to February, the greatest decline since 2008. In the past 52 weeks, bank shares declined by 22% in Wall Street trading. Insurer stocks dropped 13%. Capital market shares plummeted 27%. Consumer-related segment crashed 28%. We are seeing signs once again that we saw back in 2008, 2001, and going all the way back. Remember, back in 2008, we had the subprime crisis, the subprime loans, where people were getting no money down loans, people were being brought in, and it reached a level of about 1.3 trillion. Well, today in 2016, we're really seeing the same thing. Instead of loaning money to subprime home buyers, we see it in the auto industry, but bigger than that, we see the financial system, the central banks, are loaning money to bankrupt governments. They even managed to go beyond the no money down and are actually paying governments to borrow money at negative interest rates. I mean, think about this. Back in 2008, the government was in debt at around 9.5 trillion. The Federal Reserve balance sheet was 850 billion. Interest rates were over 4%. Today, the U.S. government exceeds 19 trillion, well in excess of 100% of GDP. They have to borrow money just to pay the interest. And the entire pension funds are on the verge of bankruptcy. The Federal Reserve balance sheet, guess what? 4.5 trillion. And interest rates right now are barely above zero. We are in worse shape right now. It is not getting better. It's getting worse. And this is why everyone needs to be prepared. We're heading down a path which we will not be able to turn around from. If you're buying food, you're supplying and you're buying water, you're getting medical supplies, you're getting gold and silver to protect your wealth, keeping cash on hand, You're continually purchasing ammo for your weapon. Continually do this. Do not stop. If you haven't started, go to lifereliance.com. They can help you out. They have water filtration systems, seeds, food. You can customize your order. But whatever you're doing at this point, we see that we're heading down a path where it's just going to get worse. It is not going to get better. And we're going to reach a point where when you wake up in the morning, everything is just gone. The banks are on bank holiday. You can't get your money out. You can't get food. And everything that we've been looking at has come true. And this is where we are headed. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.